Hi, my name is Sean Power, and I'm going to talk to you about everybody's favorite person, the tax man. More specifically, tax assessments and how it could affect you. Now, a property tax assessment is part of the calculation that the government uses when determining how much property taxes you're going to pay. It is vital that you not confuse an assessment with an appraisal. A lot of people think that their assessment is what their property is worth, but that is not the case. An appraisal is a third-party opinion of value on what they think that the market feels your property is worth. The assessment is what the government feels your property is worth. Not always the same thing. Property tax revenues are one of the highest revenue sources for both municipal and provincial governments. This revenue is used to pay for essential services such as snow removal, lights, schools, and hospitals, just to name a few. The municipal sets a tax rate, but the provincial will actually set the tax assessment. This used to be controlled by the federal, but that is no longer the case since 1967. Now in New Brunswick, they only have the ability to assess 460,000 properties per year. This means that not all properties are reassessed every year. On top of that, they are not able to increase the tax assessment by more than 3% per year. That is, unless you do some major renovations. So the government recognizes three types of properties: owner-occupied, non-owner occupied, and commercial. And where you fall on the spectrum can change from day to day. For example, you have your house for sale and now you need to move to a different city to work. Once you leave your property, it is considered non-owner occupied. This is the fun part. It will double your property taxes. Double them. This is very significant if you're considering moving out of your property. But the main thing that I want to focus in on is that the government does not have the ability to properly assess all properties. And now what will happen is that when a sale happens, the government now has some data to use to reassess your property. So if the property that you're buying is only assessed at 100 grand, and for some reason you buy it at 200 grand, this will double your property taxes. And then if it's non-owner occupied, it will double again. Now let's take a look at a couple of examples.
All right, in this example, I use the tax assessment across the board at $1 million. I know those homes don't exist very much in the New Brunswick area, but I'm just using this as an example. So in Moncton, the municipal tax rate is $1.6393 per $100 of assessment. Dieppe is 1.5845, Riverview is 1.5626. And every municipality also has a Service New Brunswick fee of 0.0194 that adds to the municipal tax rate. So to do the math, what you do is you take your assessment, which is $1 million, times it by the tax rate, which it depends on which city you're in, and that equals the property taxes owed. So here's an example of a house that is owner occupied. You take your $1 million, and this is a Moncton example, but you'll take the municipal tax rate of the 1.6393 plus this Service New Brunswick fee equals this dollar amount. So $1 million times 1.6587 equals 1,658,000. Oops, one extra zero there. 700. Now that dollar amount is per $100. So you divide that by 100 equals your tax rate for owner-occupied home in the Moncton area. That's assessed at $1 million. Your taxes would be $16,687. Now, if that home was non-owner occupied, there's a little more complications on the math, but basically it equates to a non-owner occupied municipal tax rate in the Moncton area of $2.9846 per $100 of assessment. So again, you take your $1 million, you times it by the rate, equals this dollar amount per 100, so you divide it by the 100, equals a non-owner occupied building in the Moncton area at $29,846 versus the same property at $16,687 should it be owner occupied. Just to give you an example on the commercial buildings, again, the tax rates will vary per city. Moncton, Dieppe, and Riverview, here's the different dollar amounts. Plus you also have to add in the Service New Brunswick fee. Depending on where the property is, you may also have to add in an additional tax such as the downtown tax that they have. But basically the Moncton commercial buildings, again at a value of $1 million, your tax amount will be $46,644 versus these two amounts that we showed above for the residential owner occupied and non-owner occupied. So this is where I want to show you where you could get in a little bit of trouble. Something that you need to watch out for. If a property that you are buying is currently assessed at $100,000 and you're actually purchasing it for $150,000, the tax before you purchase it with the assessment at $100,000 will be $1,658. If the government were to reassess your property at the $150,000 when you buy it, the potential tax jump could go to $2,488. So that means your property taxes can jump on an owner-occupied home if there's this difference in the tax assessment versus the purchase price. Your taxes could jump an additional $829. Now, for some people that is significant. Other people it's not a large dollar amount, but it is something that you need to watch out for. Now it gets even more significant when you jump from an owner-occupied property to a non-owner occupied property plus the increase in the assessment. So let's take the same example. The current tax assessments at $100,000. You purchase the property at $150,000. The tax before the purchase, just like the example above, is $1,658 based upon the $100,000 tax assessment. Now the potential tax after the purchase with the new assessment of $150,000 plus it being non-owner occupied will jump the property taxes to $4,476. That's a difference of $2,818. This is why I really want people to pay attention to this jump. If the assessment is not what the purchase price is, it could really affect your bottom line, especially when you're looking at investment properties that are going to be owner occupied versus non-owner occupied.
Now there are numerous factors that will affect the assessment value. Property location, square footage, updates that you may have done to the property, attached garage, detached garage, lot size, proximity to services. These are just a few of the things that could affect your tax assessment. Now you could fight your property taxes, but it's up to you to prove them wrong. To do so, you should contact Service New Brunswick and ask for your assessor. Now this must be done 30 days after the mail-out date. Now the mail-out date is typically the first Monday of the month of March. So you have 30 days from that date to fight your taxes. All I'm hoping is that you are more aware of what the assessment is when buying a property. Because when you buy that property, that assessment could change. And when it changes, it could dramatically affect you. Thanks, and I hope you've learned something here. Feel free to post some questions or comments below. You may also call or email me directly.